As always, my name is Keith here with Shark Indicators. We've been involved in the NinjaTrader ecosystem since 2011, providing tools like BloodHound and Blackbird that help traders be more productive and in control of their own trade systems. Before I pass it off, let's take a quick look at the risk disclosure. Futures, foreign currency, and options trading contain substantial risk and is not for every investor. And of course, past performance is not necessarily indicative of future results. Now, you probably know Kris from LizardTrader. Kris co-founded LizardIndicators with Harry, aka Fat Tails, in 2014. Their open source indicator library is one of the most widely used resources in the NinjaTrader community. Even we use them in our weekly BloodHound workshops. So Kris, with that, I'll pass it off to you so we can get started.
Yeah, thanks for the intro, Keith. Always good to be in the room, as I said. Appreciate the opportunity. If this is your first presentation with us, we're a team of two, and that's me to the left here, Kris Lassen, and our market lizard to the right, Harry, also known as Fat Tails. And as Keith mentioned, we joined forces 6-7 years ago, and since then the library here has become one of the most widely used resources in the NinjaTrader community. So that's where traders can test a variety of open source indicators to see what's a good fit without losing your shirt. So close to 150 trading tools in there, or all available for a one-time flat fee of $150. So that is a great place to start, especially as the tools are often discussed in the Shark Indicators workshops. You can also sign up for the Indicator Spotlight newsletter. That's where we, from time to time, feature library tools in a blog article with a video explanation. Can be a trading setup or just a general concept from technical analysis. And you then also get a free download from the library to review on your end. Finally, the premium suite that makes it easier to implement certain system trading approaches. And today we'll talk about a new addition to that section, the new candlestick pattern indicator. We'll build somewhat on the latest spotlight, where we discussed the fast stochastic indicator and how it can show momentum turning points. So if you didn't get that, sign up after the webinar for the spotlight. We'll do a quick recap coming up, and then we'll get into the price patterns, price action momentum specifically, and then look at how you can align that with the fast stochastic turning points. And of course, this being a BloodHound presentation, we'll look at how to build a system using mechanical trading rules and determine whether this has a statistical edge or not, or at least we'll look at a approach for doing so. Okay, so the main gist of the fast stochastic is to define momentum turning points. There is a weakness with this indicator and many other momentum oscillators. You have these distortions here in the fixed scale thresholds during very strong trends. So you always are in you're in a continually overbought here. So you'd be hard pressed to locate good entry points unless you manually adjusted the lower threshold here. But instead of doing that, you can apply what's called a roofing filter as input series for the fast stochastic instead of price. So both of these tools are available in the library, and it's a concept that was presented by John Ehlers to correct the fixed scale overbought and oversold distortions. So only wave components whose periods were between 10 and 48 bars are considered. And therefore, the roofing filter can reduce oscillator lag and be better at pointing out these turning points here. So that's the idea, to align turning points with momentum price patterns. So when you see momentum price patterns and the fast stochastics leaving the oversold turning points here, momentum pattern here, that's the general idea of this. And so to transition now into the price pattern section of the presentation, you can think of what a momentum pattern might look like if you use a sumo wrestling match as an example. I haven't been to one of those myself, but I'm pretty sure I wouldn't want to sit in the front row here if one of these guys tumbles out of the ring. But the main reason, of course, for showing this picture is the belt hold move, the yorikiri, which is also the name of a candlestick pattern. So that's when a wrestler grabs his opponent by the belt, steamrolling him out of the ring with sheer body mass momentum. So you can probably already imagine what a belt hold pattern might look like. It's a sudden change in investor psychology. And so in a bullish scenario, the open will be also the low of the bar. No lower shadow here. Buyers are just pushing prices straight up, and you'll have a close towards the upper wick of the candle, and this shadow here will be fairly small when compared to the body size. Bearish belt hold open is the same as the bar high, so no upper shadow here. Prices are pushed down, and the close is near the low of the candle, and so there's only a small wick or shadow down here. So here it is on a 5-minute chart of the ES. Important additional requirements here for the bearish is that the prior bar is a up close. So this bearish pattern rejects this prior bar close. And as you see here, there's no upper shadow here, and the lower wick is fairly small. The bullish belt hold, prior bar was closing down here, and then there's no lower shadow here and only a very small upper shadow. So that's the basics of this pattern. And apart from the candle definition itself, another important question is, of course, to consider the setups with or against the trend. So a belt hold pattern can be a continuation pattern. It can also be a reversal pattern. And in this scenario, we see here a bearish belt hold going against this uptrend here, and a bullish belt hold here, plotting against a downtrend. So these are both belt hold reversal patterns. For a continuation scenario, the bullish belt hold is aligned with the uptrend here. The trend indication itself comes from an internal zigzag indicator determining the direction of the current swing leg. And towards the top right corner here, there is a data box where the statistical probabilities of each pattern can be reviewed. So you can think of this as sort of like a shortcut to see if the pattern is able to forecast future price movements. Here we have 239 patterns, 3-bar move equals negative 0.6 ticks. On a 5 and a 10 bar, you have around 3 ticks. And that is useful because some patterns will work on equity markets, but not so well on commodity or Forex. Others can show good results on daily bars, but not be very suited for fast charts. So it's a good starting point when doing a statistical evaluation for the market or time frame that you're working with. Another continuation scenario here, the bearish belt hold aligned with this downtrend bias. Again, the data box gives us a quick indication of how effective this pattern is. So average return 0.2 ticks after 3 bars, 2.1 after 5, and 3.9 ticks here after 10 bars. You'd want to have these negative values here for a short setup, obviously. And this is, of course, not a impressive return, but it's a early indication that there might be a statistical edge here. So the next step would be to flesh out a more complete strategy concept, hopefully with promising backtest results. So we'll use a similar timed exit approach to see whether this is something worthwhile pursuing. But before we get into that and BloodHound, I want to show you another momentum price pattern, which is quite similar to the belt hold. What we see here are 2 Marubozu candles on a white background, which with a little bit of framing looks like the Italian flag here. Italy is going to play Turkey in the opening match of the European Soccer Championship on Friday, so that will be exciting. Italy is probably not a favorite this time around, but you never count them out, of course. I think I'd go with Germany or France, probably current world champion. But if we look at here the white Marubozu, we see clearly the similarity to the bullish belt hold. Marubozu actually means bald head or shaved head. So that is pointing to the lack of VIX here. So the candle opened at the lowest price, closing as at the highest. And so the opposite then for a black Marubozu, open at the high, going straight down and closing at the low. So the sellers obviously maintain control throughout the candle here from open to close. So this is just a little bit stricter pattern definition and therefore less frequent than the belt hold pattern. As with the belt hold, depending on where the Marubozu shows up, you can use it to make predictions. So if a black Marubozu is showing up during a downtrend, it's a continuation. And if it's showing up in a uptrend, again, a continuation. If it's a white Marubozu during a downtrend, we're looking at a reversal scenario. So that's why the trend indication or the trend bias is the most important filter here when evaluating patterns. For a momentum scenario, I think a continuation approach is more appropriate. And that's something that you would state in your working theory or your setup description. The benefit of doing that, writing down your ID or observation, is that it's going to be easier to translate it into these mechanical rules, because that's basically what BloodHound does, delivering mechanical, unambiguous signals. scientific approach to evaluating these setups, backing up your assumptions with empirical observations so you can actually test and evaluate on historical data. So again, the idea here is to align momentum price action patterns with the fast stochastic turning points. And so the next couple of slides will look at a couple of examples here. Bullish belt hold here pattern fairly early in the trend, shows us that the bulls are driving the prices higher here. At the same time, we're looking for a fast stochastic scenario where you're moving out of this oversold area upwards with a strong momentum. And as you see here, there were other belt hold patterns earlier on here, but that doesn't align, of course, with the fast stochastic requirement. We're thinking in terms of setups and triggers here, scenarios that can create a trade signal. So for bullish price action patterns, you're looking for a oversold moving out of that. You don't want to get in when you're already overbought. So a trigger can only occur when there is an alignment of these setup conditions here. So here you have it, and here you don't. Also, get into a little bit more detail on the belt hold patterns. They're all defined as large body candles. And there's a section in the indicator dialog box where you can specify that. Here we require large bars to be equal or greater than a factor of 1.2 here when compared to the average in the reference period. I have a reference period of 250 here. Other more complex patterns that form over 2, 3, or 5 bars also require a combination of these small and large bars, or large and doji bars. And so these are defined by the look back period, smaller or bigger than the average X factor here. And as you see, there is also a input values customizable for the trend bias. Has basic features of our premium swing trend indicator, but we're looking at the minor trend here. So it's based on a minimum deviation, by default, the average true range calculation here. And so that's running in the background, keeping track of the trend bias. With the bearish belt hold, we're looking to align a overbought scenario with a moving out of this area with a bearish momentum pattern. So we can have another quick look at the indicator dialog box to see the pattern definition for this. You define it to occur in downtrends here. And then you have also the max upper shadow size and max lower shadow size for the bullish or the bearish belt hold pattern. So again, here we're aligning here with the trend and specifying that in the indicator dialog box. So pretty flexible indicator where you can set the shadow sizes and the trend bias definition. Same for the Marubozu. Again, during an uptrend here, aligned with the trend, and the fast stochastic is moving out of the oversold area here. But instead of requiring these patterns to have no wicks at all, you can allow it to have a very small shadow. equal or less than a factor of 0.05, for example, here of the body size. If you went very, very strict, no wicks at all, like I showed in the illustration earlier, there would be quite a few setups for us to analyze. So I think we can keep the integrity of the pattern intact by allowing a little bit of a shadow size here, so that we can get some more setups and signals. Finally, the black Marubozu, aligned here with the fast stochastic as it moves out of the overbought. Those of you who are already familiar with BloodHound, you see here that the conditions here are not perfectly aligned. This bearish price action momentum pattern is coming a little bit before we actually move out of the overbought. That's because we've allowed for a signal extender. So setting a slight offset for each of the setup conditions that will trigger the signal. So BloodHound is quite a flexible tool and will allow you to translate almost any setup description or hypothesis into mechanical rules that you can objectively test on historical data. So the caveat here is that it is mainly the indicators that are doing the heavy lifting. So you can think of BloodHound like the glue, so binding together, for example, the fast stochastics here and the price action momentum observations. So it's important to work with indicators that are well conceived and programmed and compatible with the Shark indicator products. So what we've done so far is really the visual testing phase, checking that the rules of the hypothesis execute according to the observations that we made. And once you're confident it does what it's supposed to do, you can run a quick back test, for example, using the strategy analyzer with Raven. I'm just showing this here to see how easy that is. You can set a average true range calculation on 50 bars, and then the profit target is 4 times and stop loss is 2 times that. So pretty simple 1 to 2 risk, 2 to 1 risk reward ratio, giving you a quick first impression on how the concept performs. So over a 2-year period here on the E-minis on 5-minute bars, a profit factor of 1.23. So looks like a pretty good starting point. We have 575 trades combined on these instruments, so good statistical basis to work from. But then if you look closer at the actual trades, you get examples like this. So you're in here, exit here, which is of course completely unrealistic. You wouldn't leave a trade hanging like this in a live scenario, letting it hit the stop loss here. So instead, I suggest we look for this correlation between the entry points and the price movement that followed immediately afterwards. So you want to establish this cause and effect relationship between the prediction and what actually happened. As with the candlestick patterns, you can create a timed exit to check and see whether the entry signal moved favorable to the position after 3, 5, or 10 bars. And the entry signal is then just reversed, inverted, exiting after n bars. So I think that is the most straightforward approach to validate whether a setup is predicting or if it has any forecasting abilities in the market that you're working on. So just a quick peek at the entry template here with the belt hold and Marubozu patterns, aligned with the fast stochastic oversold and overbought. Again, thinking in terms of setups and triggers here, situations or scenarios that can create a signal, aligning them. But that doesn't mean that it all has to happen on the exact same bar. So I mentioned that BloodHound is quite flexible and can accommodate many scenarios. So case in point here being the signal extender that I've added here and here to allow for a little bit of an offset for each of the setup conditions. And for this timed exit scenario that I suggested, you would just use a couple of other function nodes here to turn it around and count to 5 basically. I'll do a tutorial on how to do all of this towards the end of this week. There's a NinjaTrader presentation tomorrow, so busy week here, but I will hopefully get a tutorial out for you guys showing how to do this by the end of the week. So keep a lookout for that. And let's have a look at the timed exit template. So exit condition here, I've just moved these out to unrealistic levels so that we always get the exit after 5 bars, which is set up here. So this is the same time period, 2 years on the Iminis 5-minute chart. And there's a profit factor now of 1.33, a bit more trades, 589. So a bit more than what we saw previously, which is to be expected based on the example that we saw before and was just sitting around. And all of these are, of course, just going directly out after 5 bars, as we see here. So this data will tell you then how the strategy performs after N bars, and can also give you some good ideas on how to implement a trade management approach a bit further down the line. So for example, if you see that this initial test has pretty good performance after 5 bars, but beyond that, so let's say 10 bars turn stale performance, and so you can use that to implement a trailing stop or move in a profit target after 5 bars. That's more of a Blackbird topic and beyond the scope of the presentation here today, I think. So the idea was to walk you through the first step of checking the validity of a trading idea here today. Whatever the observation, pattern, sequence of events, anything that seems like a good candidate for predicting market direction, that is your first order of business. There's no holy grail or magic bullet, unfortunately, that will save the day. But if you can establish this cause and effect relationship between your entry point and what happened immediately afterwards, I think you'll be on the right track and in a position to decide whether to pursue any given concept or idea that you're working on. So with that, I'm going to wrap up the meat of the presentation here and transition into the special offer we have prepared for today. Sort of like a pre-launch event here today. Official launch is tomorrow, so exclusive crowd here. There's a total of 30 candlestick patterns for the candlestick pattern indicator, identifying reversal, trend continuation entry points. There are, of course, a few alternatives for our candlestick pattern indicator out there, but yeah, the objective was to create something that goes above and beyond when implementing with the system trading approach, and I think you'll find that here. The most important filter, as I said, being the internal zigzag. Traditional approach for considering momentum setups, as I said, is to align yourself with the trend. And yeah, each pattern you can evaluate either reversal or continuation or both by selecting that option in the indicator dialog box. And that's not something that we've seen available with other candlestick indicators we've reviewed. And this is important. You can configure the pattern definitions as you want. The size of the small or the large bar, the doji, specify the relationship between them, and decide the look-back period when determining the average bar threshold that you're working with. The statistical probabilities, I think we talked a lot about that here, giving you a good starting point for evaluating whether there is an edge to it in any given market or time frame. So that should be a big time saver. And then we also include a template for scanning of patterns in the market analyzer. So there's all these 30 patterns are added in the template. So by just adding selected instruments, you can scan for these patterns in various time frames. So safe to say, this is something that you can use as a standalone tool to identify buy or sell opportunities, or you can get it as a system add-on for a existing approach or strategy, combining it with other indicators, as we saw here today. So this is the bundle. So you get BloodHound with this, the new candlestick pattern indicator, along with the library. So list price here is 1,220. So we extend a launch rate here. We typically only do this when introducing new products, come with a solid number of features, and those who get in early benefit from later updates that typically include additional features. And at that time, prices adjust somewhat. So that makes most of the early adopters feel pretty good about their decision on getting in on the launch event, which is, by the way, today. So I just also want to mention that all the products are one-offs, so there's no recurring payments or charge for future upgrades with our products. Of course, if you're already a member to the indicator library, we have a special rate in there for you. You already get a discount on the premium tools, but for launch events, we have an extra special rate. So log in to take advantage of that. Okay, so this is where you go to register for the launch promo, lizardindicators.com/event bundle. Trying to copy this link here. Maybe Keith can drop it into the chat or the Q&A. Yeah, if you've been sitting on the fence, wondering if you should get BloodHound or not, this is a good opportunity to dive into it. And yeah, if you have already a BloodHound, there is also an option to pick up just the library membership and the candlestick patterns in a bundle as well at this link. So with that, I will wrap up the presentation here today. The event bundle is up until the end of the week, so head on over to check it out. And yeah, with that, I'm going to hand it back over to Keith, open up the Q&A, And yeah, you can also get in touch with me directly in the contact form over at LizardIndicators.com. Otherwise, drop me a line at info@lizardindicators.com. Alrighty, so let's go to the Q&A here. Yeah, the JJ, you asked, the statistical expectancy measurements are done over the past XXX bars days. Yeah, it will depend on the number of data that you have on your chart. Obviously, you want the statistical measurement to be over a certain threshold. I just get a drink of water here. I've been talking for too long. Yeah, so there is a place in the indicator where you can say, okay, what's a statistically valid pattern, and by default the threshold is 100 patterns. You want 100 patterns to say that it's statistically valid. And so if you are below that, then you will see a data box that has a different coloring, so it's just gray. Whereas if it's valid, it will have a color plot. So George, wondering how long the presentation is. Well, I guess you already got the answer to that. So what kind of charts do you test these on? Well, candlestick patterns are primarily used on time-based charts, because the concept here is to show that, for example, there was very little activity on one candle, a small candle or a doji candle, and then all of a sudden a lot of activity in the next candle. So that will work best with time-based charts to do this type of analysis. Also, from what I've seen so far, I've been showing 5-minute charts here today, but that's pretty much only for these momentum 1-bar patterns that I can see some positive results there. It's generally something that works better in higher time frame charts. So you could use it at a minimum in a 15, 60 minutes daily charts. So partition based on time of a day. Yes, this template that I showed you here today has a time solver in it. And so it's the test results here were for the regular US trading session for the minis. The indicator currently being traded with the real money, James. Well, it's a fairly new indicator, so I'm currently myself in the testing phase of this, finding setups that I'm willing to put some money behind. Robert, if you have BloodHound, the library. So yeah, there is a special rate for existing members and for those that already have BloodHound. So the list price for this is $275, and the introduction price for members is $225. That's going to move up a little bit next week sometime. Daily charts, I haven't looked at that much so far. We're actually probably going to have a separate candlestick pattern indicator for daily charts. There are certain patterns here that are well known, but they don't really work on intraday bars. Those that are looking for gaps will be pretty useful on intraday. So we'll see how that progresses, and If you're interested in that, you'll probably get a heads up when we're ready with the daily version for the candlestick pattern indicator. But yeah, safe to say you can also use the patterns here on daily charts. It's just that there are many patterns here. Yeah, that this version is mainly for, or it's customized to work on intraday. Will of course also work on daily charts. So David, yeah, all patterns are pre-programmed. It comes with the default settings, and then from there, I suggest you follow a approach similar to the one I suggested here today. Make some observations, try to find something that seems to work, seems to be successful, and then write that down, try to translate it into mechanical rules, and then do some testing on it. The patterns are available as public data series, so you can access them directly in BloodHound. So if you can use the indicators for stocks and options as well, yeah, with the caveat that I mentioned earlier, some of the patterns will work better or worse in certain markets and timeframes. Again, coming back to the data box for you to have a quick peek at what works and what absolutely does not work at all. Yeah, as I said, I will come out with a template based on what I showed here today, aligning the fast stochastic momentum turning points with the price action patterns. It's just been a pretty busy week here so far with the 2 presentations and getting everything ready for the website and lots of back-end admin stuff here. So I haven't quite gotten around to do the tutorial yet, but probably sit down and get that out towards the end of the week here. David, you ask if there are 2 and 3 bars included. Yes, there are. There's a number of 2-bar patterns, a couple of 3 bars as well. That's something that I'll go over tomorrow in the NinjaTrader presentation. So swing by there and you'll get more information there. Same for you, Bernd. Same answer. All right, so I see I have a couple more questions here. Getting a little bit late here in Berlin, Germany. Getting ready to turn in here pretty soon. So yeah, Bruce Johnson, you ask if there's a test trial period. As usual, we offer a free 2-week trial period. And so you can go and register for that at lizardindicators.com/trial. Just check the candlestick pattern button there, and I'll get the install link over to you. All right, so George, you ask how many computers can you use the indicators on? So the premium suite indicators are valid for 2 machine IDs, so 2 PCs, ID being that you have 1 trading station and then maybe a laptop or a cloud computer somewhere. So yep, 2 machine ID is valid for each premium license. All right, so if you have any other questions, as I said, feel free to drop me a line in the contact form over at lizardindicators.com. Also info@lizardindicators.com if you want to send me a direct email. So with that, I'm going to wrap up the presentation. Thanks a lot for checking in. Hope it's been of value to you, and I'll look forward to seeing you in the membership section, or maybe in tomorrow's InnoTrader webinar. Yeah, Kris Lassen, your host today from Berlin, Germany, approaching midnight here, signing off. Thanks a lot. Take care. Bye-bye.
All right. Thank you very much, Kris. Get some sleep. Thanks for coming in, guys. As always, we're always happy to have Kris Lassen here. He is a veteran in the BloodHound sort of webinar circuit, always has good stuff to share. By evidence, Zach uses his indicators in his workshops, and he doesn't use third-party indicators ever in his workshops. So definitely shows our sort of trust in what he has to do. So yeah, if you want to learn more about his stuff, lizardindicators.com/event bundle. The recording will go out by email to registrants here, as long as you accept Zoom emails. Should be tomorrow afternoon. If you are set to get notifications on YouTube from our YouTube channel, that's youtube.com/sharkindicators. You should get notified of the recording sometime tonight. So, all right. Thanks for being here, guys. Have a good night. And we might see you in next week's vendor webinar. If you're in our email circuit, you'll get notices about that. Thanks, guys. Have a good night. Bye-bye.